evening, everybody. Thanks for giving up your time this evening to hear us talking about our various companies. It's a privilege to be here and the lovely weather that London and the UK has been giving us. Whilst you're reading the disclaimer, I will tell you that I didn't only come up for this presentation this evening. I actually came up to attend the big wedding on the weekend on Saturday, and it was fantastic. The weather was beautiful, and it was a lovely, lovely occasion. I'm not talking about the royal wedding, I'm talking about my daughter's wedding, which also had this wedding. And that was, of course, to me, the biggest wedding and the best wedding ever. So I'm going to be talking about Goldplat, and we are a bona fide junior gold producer. And one can look at it that way, or we can look at it differently and say that we actually produce most of our gold and precious metals from what we call the gold recovery business, and then some of it from a growing and increasing mining portfolio. In a snapshot, we're a profitable company, we're a growing company, and more we're marketing ourselves as a green gold producer. And I'll tell you later on in the presentation why we feel we have the right to introduce ourselves as green gold, because we literally are taking waste products from mines and dealing with them in a responsible fashion. Just to give you some of the key data, and I'm certainly not going to go through everything, but we are an AIM-listed company. The share price at the moment is around 6p. It's come up from a couple of years ago, 1.5, 1.6p, to a high of about 8.5p. We've got 167 million shares in issue, and the market cap has been around about 11, 12 million pounds for the last while. We've got a split Nomad and broker role, with the Nomad being Grant Thornton and the broker being WH Ireland, and we have St. Bride's as our financial partners. On the shareholder list, you'll notice that we've got very few institutional shareholders. Martin Oye, who's our biggest shareholder at 10%, is a private investor from Australia. And the only real large shareholder, institutional shareholder, is Fidelity at just under 9%. So really we're a retail-held company. And probably over time, as we get liquidity events and as we grow our portfolio and look to the market to raise capital, we'll bring in more institutional investors. And I will talk about that later as well. In terms of the board, it's a fairly young and a fairly new board. Matthew Robinson came on as chairman, non-exec chairman last year. I came on as the CEO. In fact, I came on as a non-executive director and chairman-elect 3 years ago, and then decided to take on the CEO role. And then we've got two youngsters in the team as chief operating officer and financial director. They're both in their 30s and very dynamic young guys in Hansi van Vreden and Werner Klingenberg. Ian Versace, who's now taken on the role of executive director without a particular portfolio, is a founder of the company, and he was for many, many years the CFO and at a point in time the acting CEO. Nigel Wyatt's a UK NED, and Sango came on last year. He's the chairman of our South African subsidiary, and he runs the company, which is our BEE shareholder, 26% shareholder in South Africa. So if you look at the company, what would be our investment case? I think the first thing is, in terms of finances, we are cash generative, we're profitable, and we've got a very clearly articulated path to building production and profitability. We're undervalued, we believe, relative to our peers. As said, we've got a price currently of around about 6p, and the analyst price target is 15p. I could point out that we only changed brokers recently, and the previous broker, VSA, had a price target of 17.3p, so quite significantly higher than that. We're under-leveraged. We typically have self-funded. We haven't raised capital in equity capital since listing over 10 years ago. And we've self-funded all of our growth and our projects through internally generated capital. We did, in the last year, take out a $2 million loan, and we used that to build our new processing plant in Kenya. We're targeting an increase from around about 42,000 ounces now to about 50,000 ounces of annual production from our recovery operations. And we're also targeting a growth in the medium term, 2 to 3 years, from negligible 5,000 odd ounces of gold from primary production, also to about 50,000 ounces. And then I think important to point out, we're a niche recovery business. There are very, very few other businesses globally that do what we do in terms of taking byproduct material from mines and extracting precious metals. The management team have been at this business for close to 30 years. And the niche, our competitive advantage lies not in any proprietary clever equipment. It's all off-the-shelf stuff, but it's in the people that we have and then know how to do the business that we do. And then finally, as I said, the primary mining operation in Kenya, it's a decent sized resource of 670,000 ounces, and we've got growing production and opportunity to grow the production significantly. So I said we're a gold production company with a difference. We have two leading gold recovery businesses, one in South Africa and one in Ghana, and the biggest one by far is in South Africa. That being said, I'll take you through how we're going to be growing the Ghanaian business in the future rather than the South African business. So in South Africa, we produced just short of 30,000 ounces last financial year. In Ghana, just over 10,000. And we're sourcing materials from primarily Africa at the moment, but increasingly from South America and North America, and then opportunistically from anywhere else in the world that we can find the kind of material we're looking for. Sometimes when I ask even existing shareholders what it is we do, they nod knowingly and say, well, we know exactly what you do. And actually, many people think that we recover gold from tailings deposition sites, big gold dumps like what DRD Gold does. And it's absolutely not what we do. We in fact, recover gold from byproducts such as carbon and other things, and I'll talk about them now, from the primary producers. Our clients are pretty much all of the blue chip producers around the world. Obviously in South Africa, we cover just about all but one of the major gold clients. In Ghana, we cover all the gold producers. But then globally, just about all of the big producers, we're recovering byproduct material from most of them. We also getting sourcing material from platinum group metal producers, again primarily in South Africa because that's where they are. And we get material from other refiners around the world. And then more and more we're looking at, in terms of becoming a green producer, doing artisanal mining cleanups. And I'll talk about it, a small project we're looking to start in Ghana, and then doing similar things in Kenya and in South Africa. So what is it we really do? We get materials from the mines that they typically have to throw away. They either just deposit it into tailings, or they stockpile it somewhere on the mine forever, or they pay people to come and take it away and get rid of it, and they don't get revenue from it. And these materials include fine carbon, which comes out of the carbon and leach circuits. It includes mill liners, both rubber and steel mill liners, wood chips, primarily from underground mining, where wood chips get caught up in the ore, grease, primarily from girth gears and various gearworks in the processing plants. And then we do plant cleanups. We're busy doing quite a big plant cleanup in South Africa at the moment, where a plant shuts down. And as some of you might be aware, over the life of a processing plant, a lot of gold gets leached into the foundations, all the pipes, all the electrical conduiting, the civils. We clean all of that up and extract the gold and other precious metals from it. And then, as said, we are now looking to do reprocessing of artisanal tailing material primarily. The processes, as said before, we've got no very clever, very different equipment. Most of it's off-the-shelf kind of equipment, but it's really in the amount of equipment we have and the combinations of processes that we can put the different byproducts through to optimally and profitably extract precious metals. So we have crushing circuits, carbon and leach circuits. We've got wash plants primarily for washing the wood chips and other material. We've got spiral circuits, various forms of incinerators. We do shot blasting of mill liners. We have rotary kilns in South Africa, flotation circuits, and we now have elution circuits at all of our operations. So we can now, as said in production, we produce gold doré, we produce silver doré, we produce some PGM concentrates, and we produce other ash and other concentrates which we export to refiners around the world, like Arubis in Germany and Umicore in Belgium. I'll touch briefly on the concept of being a green gold producer. Really, as I said before, we take metals from byproducts, and we remove, and we're working on a good technology to remove things like mercury and obviously cyanide from tailings and from other byproducts. And we deposit the stuff then in an environmentally friendly manner. Talking about artisanal tailings, and we've alluded to it in the public before, is, for example, Ghana. It's a great example. They've got a huge big problem with artisanal miners, both local, legal and illegal, and they're trying to formalize the small mining and the artisanal mining sector. And it's been infiltrated by Chinese operators and operators from Burkina Faso and all over. And basically the government shut it all down, shut down all artisanal mining last year. And they'd asked us to try and see whether we could clean up these tailings, because the tailings are full of cyanide, they're full of mercury, and they're polluting the rivers. And they want to build up agriculture, but they can't mine this land because you've got these harmful products in the tailings. So what we're looking to do, and we've started looking at it in one particular area, is go and reprocess the dumps, extract the gold, and share the profitability with the government, who will put that money back into rehabilitation and restoring the land to where they can do agriculture there. And obviously we'll also at the same time extract the mercury and whatever cyanide there is in there. The government have pulled back on the project because they need to manage the formalization of the artisanal mining at the same time. So we do everything in tandem. So it'll be formalizing the system. We'll do the rehabilitation, the extraction of the metals, and the government will then do the rehabilitation of the land. So that's quite exciting, and we're looking at, if that works, we'll piggyback off that and do the same in Kenya and perhaps elsewhere. We have built and sent a plant up to Ghana to do that when the government's ready. We are responsible gold accredited, both in South Africa and Ghana, and essentially that means that we have to be able to prove the provenance of the sourcing of all of our material. So it can't come from any illegal mining or any funny kind of areas. We've got to be able to prove that it was taken from a proper source all the way through to our plants in the various places. And similarly, we've recently become a member of the Minamata Convention, which proves that before we take any material that's got high levels of mercury in it, we'll have to prove that we're going to ultimately take the material and the mercury into a form which is accepted globally. And we continuously on the energy side are looking to do things like pyrolysis, where we can extract the metals and other minerals in a less of a energy intense kind of fashion. I'm going to go very briefly through the different operations. In South Africa, which does, on almost every measure, be it profitability, revenues, production, it's about 2/3 of our business. It's an old business. South Africa is a mature market. The gold mining there is probably in a slow decline, at times not so slow in fact. And so we really are focusing on any growth there will be growth in profitability. So it'll be from getting better quality material and processing in a more productive fashion. It's not going to be from higher levels of throughput. I did allude to the fact that we are busy processing a decommissioned gold operation from one of the leading producers. And yeah, that's pretty much what we do there. But we do everything from the fine carbon through all of the different products that we've spoken about, we do in South Africa. We have a tailings facility of our own there, and the year before last we had a JORC compliant resource declared there, and it sounds small in resource terms, but it's 82,000 ounces of gold and significant silver and uranium oxide, and we're looking to reprocess that. And for us, it's our own tailings, it's our current tailings, running at about 2 grams a ton, and we're busy working on and have just about completed the work on optimizing the metallurgical extraction and recoveries of that dam, firstly, and secondly, finding an alternative place to deposit it. And there's a disused open pit right next to our operation, and we are very advanced in the process of acquiring the right to deposit our tailings into the open pit. So we won't be building a new dam, we'll actually be filling up a hole, which is an environmental problem for the government. And then we're looking to diversify, and more and more we are diversifying into platinum group metals in South Africa, and also sourcing of material from elsewhere other than just South Africa. So we get material from other parts of Africa into South Africa. Gold Recovery Ghana, it's, as I said, currently producing about 10,000 ounces. We're looking to at least double that over the next 2 to 3 years. Two sources mainly will be, first of all, West Africa. We've had limited success in bringing material in from West Africa into Ghana, due mainly to a convention, the ECOWAS Treaty, which basically says that countries within West Africa won't export material to other countries in West Africa which isn't finally beneficiated. And we are working around that, and we're working closely with some of the governments, and we're having some success. So we're looking to increase sourcing material into Ghana from West Africa, but also for 2 years now we've been working very hard on developing the South American market. We've got a partner in Brazil. We've appointed a full-time employee in Brazil to work around South America, As a management team, we're spending a lot of time in South America, visiting the clients, visiting the operations. And we've, for 2 years, been doing a lot of trial material and trial batches of material. And it might be difficult to believe that we can containerize mill liners or wood chips or carbon and send it across the ocean to Ghana and extract the minerals at a profit and the metals at a profit. And we've done that. Every single trial batch we've done has been profitable. And we've now done 3 significant, big contracts with different companies. So we are looking at South America as a big growth engine, but not in the first instance to build a plant there or an operation there, but rather to import into Ghana primarily, and also to an extent South Africa, if it makes more sense. I've spoken a bit about the environmental services and the cleanup that we might do there, and hopefully we can get that off the ground, because I think it's a great initiative to work with the government to do that. Then in terms of primary gold production, we've got an asset in Kenya, which is very subscale. It was only producing literally a couple of thousand ounces up till a few years ago. We, over the last year, expanded our processing capacity there. We put a new plant up. Well, I say new, we actually decommissioned a plant in Ghana, deconstructed it and shipped it around to Kenya and reconstructed it there and added a few more things. We typically operate like that. We build our own stuff, we buy second-hand equipment a lot, and we rebuild things ourselves. So we try and keep costs down a lot, and that's what we did there. We've got a good resource there. We've got 670,000 ounces, and it's a very shallow underground mine that we're mining from. But the old plant was marginal at best. It needed high-grade ore to make it profitable. We've now got the new plant running. And as of this afternoon, in fact, we announced that we're decommissioning the old plant. Well, not decommissioning, we're just closing it down and literally putting it on care and maintenance to see whether we can be more profitable at the new plant standalone. We've got quite a nice exploration ground, a piece of exploration ground license around the existing mine. And we've got a great opportunity to expand the resource as well if we were to put money to exploration, which isn't really, we're not spending much money on exploration at the moment. It's not what our shareholders really want. The focus there has got to be on increasing the actual gold processing. Looking at the primary mining expansion strategy, it sounds very, very optimistic, but we do recognize that in only having recovery, or primarily having recovery operations, we do have a risk, because we really at the whims of all the producers out there to take whatever material they give us. Even our contracts aren't contracts that say that we will give you X amount of tons of carbon every year. The contract literally says that if we do give you material, these are the commercial terms. So, if they don't want to give us material at a particular point in time, they don't. So we're out there. We've got very strong sourcing teams that are continuously out at the operators getting material, but we've got no resource of our own for the recovery operations. So we've decided as a board that we need to increase our primary mining, and we're looking to build it up over the next few years to also about 50,000 ounces, which clearly means we're not going to get that from Kenya. I think at best that could be a 15,000 ounce a year producer. So we really need to acquire new production. So we're on the lookout for joint venturing, merging, buying, acquiring properties, wherever it might be, but decent quality, value accretive expansion. I'm not going to take you through that table. I think we've mentioned the numbers. We produced last year just short of 43,000 ounces, of which about 30,000 was from South Africa, 10 from Ghana, and it'll be about 5,000 from Kenya. The numbers have been good. When I started the company 3 years ago, we were distressed. I think the concept of doing everything very cheaply is the Goldplat way, as we call it. But sometimes you've got to start putting money back into replacing infrastructure, maintaining infrastructure. I think it is a bit run down, and we've spent the last 3 years putting money back into the business. We've repaired and replaced just about everything we need to. So we're very happy now. Our equipment is all in good condition. And is going to last us some good time. And in the process, we've been increasing all of our numbers. The revenue's gone up, the profitability's gone up, the production's gone up, as you'll see on the next slide. So constantly gone up over the last few years. So we're very happy with the numbers. I think we've done the easy stuff. now's the hard work. We've got a really good solid base now to turn around and start growing because everything's in good working order. We're cash generative, we're profitable, we've got cash, we've got very limited debt. We've not drawn down on the shareholders for equity capital. And so I think we're in a great position to grow into the future. We've got a good plan, we've got a good board, good management team. So I think I know we're ticking all the boxes and we're well prepared to take us into this next stage of our growth. I think everybody thinks they're undervalued. I think the numbers will say that we are relative to our peers, but again, the peer group is difficult to judge. But based on the peer group average of a EV/EBITDA ratio of over 5, close to 6, we're way below that column on the right-hand side there. But aside from that, I think I've seen that the more we deliver good results, good news, good growth, the more the market rewards us. And I think, if we do that, we'll see our EV/EBITDA and all the multiples coming right over time. So I'm confident that'll happen. That's a repeat of the first slide. I think we've articulated that case. And my time is up.
It's question time. Any questions, anybody? Gentleman at the back, then.
For your company, what is the average cost of producing an ounce of gold?
We don't articulate that. I'll tell you why, because every single batch of material from every different supplier is a completely different thing. So it's not like in a mine where you've got a resource and you've got a working cost and an operating cost and you can say it's $1,100 an ounce. Because literally every single contract and every single batch is different. And I think analysts made the mistake in the past of just taking your costs and dividing by the ounces and coming to a number. And it doesn't really make much sense. I mean, suffice to say, we're making money. We're producing 42,000 ounces and the gold price is whatever it might be, $1,300. You can work out a number, but it actually means nothing. We were making profits when the gold price was at $1,150. So you can draw your own conclusions on the global numbers, but really it doesn't make much sense in the recovery business. Sorry, I couldn't answer your question properly, but
next question over to the left here.
Hi there. Couple of questions. Firstly, can you explain what artisanal tailings are? Secondly, presumably as you have more of your own mining capacity, your share price will be more linked to the gold price. Would that be a reasonable assumption? And the final question is there any political risk in Ghana? My understanding is it's a fairly stable African country, but they're few and far between.
Yeah. Artisanal tailings, essentially, artisanal miners are hand-gotten miners. They dig holes in the ground. They follow very thin veins, and they literally pick the eyes out, and they chip the high-value stuff off the surrounding rock, which always contains quite a lot of value. And they literally leave heaps of chippings, what we call them. And then they also have very rudimentary processing on site in rivers with water, and they produce heaps of tailings. And it literally is contaminated because they extract the gold often with mercury, sometimes with cyanide, various different very rudimentary processes, and just leave literally piles of sand and gravel. Sometimes the size of a couple of chairs, and sometimes the size of this room, all over the show. With very little regard of polluting rivers, land, agricultural land, or whatever. So we kind of aggregate all those tailings and bring them together, pay the artisanal people, take them and extract the rest of the gold and clean the place up. Ideally, and what we're tending towards is doing that in conjunction with the governments to do it in a responsible fashion, in a coordinated fashion. Your second question, sorry, just remind me again.
The links to the gold price?
Yeah, I mean, I think absolutely. The more we do primary mining, the more it will be linked to the gold price. And your third question was?
Political risk?
Yeah, I mean, so absolutely. Africa, well, all over the world you have political risk. Africa, I think the particular risk in Africa, as a broad generalization, is African countries change, and they change quite quickly. And you can look at historically, Zambia a couple of years ago ramped up the royalties, all foreign direct investment in the mines disappeared, and they changed the mine again. Tanzania last year, you saw what happened there. They've banned any export of concentrates, and it's a mess. The DRC kind of flip-flops all the time. So I think when you're mining in Africa, where there's such a lot of opportunity to mine and to process, you need to be diversified, because if you're in a country and it changes, you can be in trouble. Like if you were in Tanzania last year as an only source of production, you'd be in real trouble as a company. So, I just say if you're in Africa, expect change. It'll be fast. It'll probably change back again, but it's going to happen. And so diversify and learn to be prepared for change. So political risk, absolutely, there is. We're in South America now, and there's as much political risk there as well. You just got to choose your countries.
And final question just down here.
Hello, everybody. South Africa was very dormant for the time being. Now the new government has come in, which will give some more opportunities for the mining sector. And as you mentioned, Goldplat, have you got any production on the platinum?
We don't have production in platinum, no, and we never will. As long as I'm around, we won't produce platinum, but we do take byproducts from the platinum producers, and we produce a platinum group metals concentrate, which we then sell back to the platinum group metal refiners, the big refiners. But we are not going to try and get into the production business at all, nor the refining business of platinum, because the barriers to entry there are far too big. But we certainly are more and more looking to get byproducts from the platinum group metals producers.
Also that you have got two different mines, one in Kenya, one in Ghana, way apart from each other. So how do you manage your labor force and the supervision?
So, in Ghana, we've got a recovery operation, which is very small. Kenya is a mining company, which has got about 220 employees. Totally different companies, run by their own management teams, and at a group board level, we kind of integrate the management, but they're totally separate operations altogether. Pleasure.
Gerard, thank you very much indeed. Thank you.
Thank you very much.
Thanks.